It's time to join Montana's very own and your voice for agriculture, Talkin' Ag Lane Nordlund, for today's LaneCast.
Hey everyone, welcome back to the agriculture conversation on the LaneCast Ag Podcast. And holy prices, that's what we can say about the cattle market here in 2025. Of course, last week we watched that Northern Livestock video auction. Their prices were $20 stronger than their sale back in June and around $14 stronger than other video markets the previous week. So it's been fun watching these prices and, of course, watching the fundamentals that come along with these. And joining us, we were just with him not too long ago in San Diego, but Don Close with Terrain is joining us because we just had the 2 July cattle reports come out, that cattle inventory report and the cattle on feed report. And before we jump into there, Don, what's it been like? We've seen several 100,000 head of cattle marketed over the past 2 weeks. We have another 100,000 plus getting marketed in Winnemucca, Nevada on Superior sale this week. What has it been like watching these prices for calves?
I'm in the same state of bewilderment as you are. and bewilderment, but it's fun to watch. I hope it's as fun to watch as those cattle go all the way through the system. But it's amazing.
It's fun to watch when you have cattle, I think, too. I mean, we have cattle. I wish we had more cattle, but I know if we had more cattle, we probably wouldn't be in the position that we'd be in because everyone else would have more cattle. But, as we talk about these numbers that came out from USDA, that, again, they could indicate a little more on so many different factors. And I know herd rebuilding will be one of those areas that we touch upon here today, too. But looking at those numbers, it is still clear that a bullish report came out from USDA. The herd continues to be at one of its smallest levels in decades. What is your take on those two reports that came out here in July?
Well, I concur with everything you just said. I think the overall tone of the string of reports was bullish, no question about it. I think that it clearly confirmed that while we're seeing some patches and some anecdotal evidence of heifer retention going on, the market is yet to reach that point of equilibrium where there's enough heifers being retained to formally say that we're expanding. The other thing that I would say about Friday's report is, in spite of what the pre-report estimates were, I think the market went into those reports with privately holding a neutral to negative tone, because it's after the whole series of all-time record highs we've seen, it's just easier to anticipate, okay, it's been fun, but this party's probably finally over. And so when the numbers came as consistently bullish as they did, it just set us up for a larger springboard as we opened up trade this week.
Now, of course, this was the first cattle inventory report since 2023. There was a lot of statements and excuses made last year as to why USDA was not going to conduct that report. So we are missing data from last year. So how do you take this data and look at other cattle on feed reports and other indicators to truly get a gauge of what happened between now and 2024, and of course that last official July report that came out in 2023?
Yeah, okay. The first explanation that I will give is I don't have a very high confidence factor or reliability on the July inventory report under the best of circumstances. And the reason that I say that, with a sample size of only 10,000, it's just too small. The only number in that report that I really think the industry counts on is when we first get that first calf crop number. So aside from it, the rest of it, I don't put a lot of emphasis on that number anyway. I think while there was you could pull positive connotations out of the inventory numbers. The real bread and butter on Friday was that cattle on feed report, with all categories being at the low end or outside of pre-report estimates, and specifically that placement number down 8%.
And when we look at those numbers on the cattle on feed report, we're down 2% from last year. A lot of folks, again, really wanting to know and discuss and make their guesses around heifer numbers and herd rebuilding. We saw heifers and feedlots were down 5%. And some commentators out there, they were quick to say, yep, herd rebuilding's underway, 5% less going in there. But again, I'm just so cautious when we look at these and we look at the numbers. What is your analysis of that 5% on the heifers, and what's the conversation you're having with producers that are asking the very same question?
I think the more critical component and a more historically comparative number is to look at that heifers as a percentage of cattle on feed. That was at 38.1%. And I'm still working on. I put a lot of emphasis on those quarterly reports for that steer heifer breakdown. In that series, I look at between 36 and 37% heifers on feed is just kind of treading water. We're not expanding nor contracting. Above that level, we're still contracting, even in light of how light cow slaughter has been year to date, and we've got to get below that 36% level to really see the momentum and the kind of expansion that's needed to roll this market over. So I think that's still, to me, was probably the most important number of the day. Now, it's also worth saying that at 38.1, that was 1.5% below the heifer percentage on feed a year ago. So we're heading in the right direction. And as we said in the intro, there's anecdotal evidence there's signs that it's beginning, but I don't think that we can outright say that, okay, it's rolled over and we're expanding.
Some interesting trends that we're seeing last week, though, Don, at the Northern Livestock Video Auction. I don't know if you saw any of our coverage there, but I want to play you the comments made by former world champion livestock auctioneer Ty Thompson as he saw those heifer calves, lighter heifer calves, and who was buying them. I'm going to play this clip here for you.
$30 higher than they were in June on these light calves. The heifer demand is good, and it's the first time that I've seen on these light calves where if there's no replacements kept, even though they're a lighter calf, a lot of people are trying to buy them for replacements. But the interesting thing about that is the feeders are taking the replacement buyers out. 450-pound heifer, near $5 a pound, 500-pound heifer, just a smooth 500-pound heifer, all the way up to 4.25. Sold one string of no brand, 470-pound heifers. They brought $480 a pound.
And so that was just a quick glimpse at that, but definitely a trend where there was producers there looking to buy some replacement quality heifers, and they couldn't afford them. Feeders were looking to buy them. What's your take on that?
So was seeing that interview last week. Over the weekend, I simply did a regression of the cost of gain to the value of gain. Mm-hmm. So what we're looking at is we've got the value of gain so high in relationship to the cost of gain that, in my mind, that is the incentive that not only encouraging cattle feeders to make them as big as we're making them today, but it also gives the credibility to the fact that in the competition of the marketplace, she's still more valuable in the feed yard than she is to take home.
And so when we analyze that, I was just looking at that northern sale too, and the conversation we had a few weeks ago in San Diego is just that breakdown: 112,000 plus head of steers sold last week just on the northern sale, and 51,000 head of heifers. And, as we see these trends, the cattle inventory report coming out, are we going to see a lot of heifers flood the market here this fall when maybe folks just have their steer calves contracted and they're, again, trying to look at the factors that may impact them, trying to keep a few more heifers? Or are we going to see folks decide, yep, we're not keeping them. We're going to take the value of that heifer today rather than raise her to a first calf heifer and cash in for $2,000 a pop, possibly? Do you think we could see too many heifers come in and maybe pull that price down in the fall run? I guess those are just a little bit of anxiousness, I guess, with folks that do have heifers on hand right now.
I don't know that I'm yet convinced that we will see oversupply of heifers this fall. And the thing you always got to think about in that heifer in the context of potential replacement, you can hold heifers back. There are several opportunities to take a bite of that apple during the development of that female. So there's multiple chances to see her return. I think we're to a point, and probably with the benefit of last Friday's numbers, that if a guy was sitting on the fence on whether I should try to retain something or not, he'll probably see it or gain more confidence that, yeah, this thing is for real and it's time to expand. So I think that will be more of an influence going forward.
Now, and again, this is shaking that magic 8 ball as well. But when we're looking at, okay, let's sell these, let's pay some debt, let's put some money in savings. I know that's a cuss word to say, is put money into savings instead of going and buying something before the end of the year for some producers, but it's okay to have cash on hand, don't you think, Don? But
yes, I do.
When we look at this, though, what are some of the projections on what bred cattle will be bringing this fall and what pairs will be bringing possibly next spring, based on all these indicators too, where folks, would rather roll the dice and say, you know what, I might just buy some pairs in the spring or some breds as well, and then I'm not feeding them throughout the whole year too. What are some of the trends that you've looked at in the past that could help make some indications towards what 2026 may look like on that bred or pair into things?
Boy, you're correct. You are stretching on that one. I watched some sales or recaps of some sales over the weekend. A 3-way pairs and good kind of cows. Typically in that 5 to 7 year old bracket, we're bringing right at that $5,000 level. And if you take the value of the calf on the ground and the value of the calf inner, that makes the total cost of that cow very reasonable. I was on a call first thing this morning with a long-term client that has a set of bred heifers and trying to figure out where to price them at. They'll be January calving cows. And where we were starting the conversation this morning was just the age-old adage of take the value of 2 weaned steer calves and take that total dollar value, and that's what she's worth. So using that calculation, we're talking close to $5,000, just under $5,000 for a spring and heifer.
Oh my goodness! If you have them and you can market them, it's a great opportunity. But I'm in the same boat like so many other people, where we're just happy to have a few still out in the field. Well, and that totally is the indicator, though, is and back to that conversation we've had in years past of we are truly continuing to see these cow prices climb higher. Are folks going to retire and just kick up their feet and lease the land or sell their ranches when you're looking at a $5,000 bred heifer, $5,000 bred heifer, and you've worked your whole life at this? Why not cash out at the top end of the market?
And no question, we're still getting reports and seeing advertisements of sales for complete dispersals. You add to that what we know about the average age of producers. I think this is a true changing of the guard of who are the cow owners in the U.S. and what's the structure of those businesses. So, yeah, I think it's still going on, and I think it's signaling a big change in ownership of cattle going forward.
Now, you put that into a young producer trying to make a go of it. Maybe they're applying for loans through their lender in coordination with FSA, whether that's to buy land and buy livestock. What are some things that concern you for folks trying to get into the game or just try to make a profit in the game now too? Maybe they're only running 50 head. Maybe they want to get up to 200 head. It doesn't seem feasible with these interest rates either. If you're paying a note in some circumstances on beeves and on land too, it is a barrier though, these higher prices for folks to try to buy out the neighbor if they're trying to keep that herd together too, if they don't have that financial backing. Even though it is great times for cattle prices, it's not great for that next generation that doesn't have that land base or the equity to try to buy cows either.
You know, the drought has certainly been a huge driver in this entire conversation, but we're now in our 7th year of net liquidation. And I think the conundrum you just explained goes a long way in explaining why we're in this tight supply situation today. The other thing that I would try to incorporate into this conversation is that classic, the best day to buy a cow is when nobody else wants one. You know, and this kind of market is not ideal for trying to get started, even though all the excitement and the momentum. The number one, I'd say 2 things that I do not want to discourage young producers from getting in. I think there's a lot of good in the industry right now, but I would even if in this price levels, if it takes longer, don't get overextended, and as challenging as it is today, don't do anything unless you've got some kind of risk management plan in place, because at these price levels, it's just too treacherous.
Now, also, when we look at the actual size of the U.S. cattle herd, and as we've talked about so many different factors, folks that are going to sell out because it's the highest price they've ever seen and maybe ever will see. It's time to retire, and they sell their cows off, whether those go, into another person's herd or they head to the feeders into the slaughterhouse. We don't have a lot of producers that obviously our agriculture continues to shrink, Don. I mean, are we going to hit a level where the new norm could be anywhere from 11 to 15 million head of cattle or somewhere in between there, where we're not reaching the number of cattle that we saw 6, 7, 10 years ago, and trying to help with the supply and demand thing? And obviously when the demand's lower, or supply's low, demand and price are higher. What are your thoughts?
The first thing that I would just say straight up are to expect to see cow numbers or total cattle inventory numbers at the levels we've seen historically. No, I don't believe that at all. If you look at all the way back to 1974 and the peak in U.S. numbers at 134 million, every time we have gone through one of these liquidating phases in the market, we've only recovered about halfway to total cattle numbers where we were at the previous cycle peak. I believe that will be the same this year. So if we're talking, I think the beef cow number as of Friday was 25 million. To see that number get back in that 28 to 30 million possibly head range, I think that's all to look forward to. So when you put that in context, though, but we're still seeing very close to what we're off, a couple of percent, 3% this year, but we're throughout that contraction of cattle, we've continued to see record or very close to record total beef production numbers. that's going to continue to be the case. And so, yeah, I think we've got a cap on how many numbers we will rebuild. But I also think if you look at the trend line for as far back as you want to go, these cattle are and will continue to get bigger. So average carcass weights, average cow weights will continue to get bigger, and that will support or compensate for total beef production.
Now, what are some red flags that you're maybe paying attention to, or something that if an event occurs could be quite alarming to the market? Or I guess what is one thing that you're really paying close attention to that maybe doesn't get talked about a lot?
The one thing I didn't spend a lot of time with it, but I did run a handful of break-even calculations on feeder cattle last week, and without question, the only way I could get that thing to work is to take a projected out weight on cattle in that 15 to 1550 weight bracket. And when I do that, I was really surprised at how close they were to being hedgeable on the board right now. But my red flag with that is there's just a lot of cattle, depending upon when they're placed and how they're managed, what their genetic potential is, that don't have the capabilities to get that big. So to end up with cattle with a break-even price that is higher than what producers are penciling in today, that's a big warning flag. I think as we continue to see the level of rain we have had all summer long, and at this 1st of August, I think we're very much on track to see USDA increasing the yield estimates on corn, and that we will most likely be seeing an escalation in ending stocks for the year. So for 2026, I think we'll still be looking at a comfortable corn stocks on hand and keep supplies at a manageable level. But back to what we talked about a minute ago, if you look at the massive imbalance we have today on cost of gain to value of gain, yes, it's super attractive today, but I don't think that is sustainable long term. So when we try to tie this into our conversation on what's it going to take to trigger that expansion, and what about the guy who's trying to pay for that female 3-5 years from now, I think that inevitably we will see a balancing act where the value of gain to cost of gain ratio goes back to more historical norms, and will put challenges on the price of these first cost of these cattle today.
Now, rewinding there just a second to the conversation around a projection and a guess around a $5,000 bred heifer, for the folks that are taking the gamble, that have the grass, that have the ability to buy some of these females or raise some of these females, what on earth could that price be for the day when folks are like, you know what, I'm buying cows, and that race is on and it's eastbound and down to go out and buy some females? What could they be?
you have hit on something that I have thought about through this entire liquidative cycle, and I think back to our last big push for expansion, 2014 and 2015. And I've been guilty of it too, but as every analyst you talk to, they talk about, well, this cycle is different. It's going to be a slow rebuild. And just that comment, every time I hear it or even say it, just makes the hair on the back of my neck stand up, because in every cycle that I can recall, we get to a point where prices are so good, you just can't stay away from the market. That in many ways, calendars are like sheep. They all decide they want one the same day. And I can't help but think we've got we've got a phase of that to work through, and that probably will be the biggest indicator of all that we've ridden this rally about as far as it's going to go. Because when everybody wants in, it's probably time to run.
Yep. Well, again, Don, I know you've probably talked with a lot of different ag media folks throughout the day and digesting all this as well. But any last thoughts, comments you just want to share in particular for these cow-calf producers that, it's great to see people smiling at the livestock video sales, because I've been to sales where folks aren't smiling and they're not getting prices that they think they should and deserve. But it's good to see people smile and take a little stress off.
The thing, and I think when you and I talked in January, and you asked me for closing comments, and I recall the comment at the time was, this kind of market is so rare. Don't get so caught up in day-to-day activity. Take a little time to enjoy it, and I think that still holds true. The one thing that I would bring into this conversation that we've talked exclusively so far in this conversation on the supply side and where we're going to be headed with that. But when we do our work on the demand side of the market, look at average retail beef prices where they're at, can you, part of it's seasonal, but can you argue that consumers may be trading down that beef ladder to some lower priced items? Sure. And it's the time of year to see that. But the point I'm trying to get to, if we look at retail beef prices in relationship to the consumer price index, or if we look at retail prices in comparison to the monthly average wage, beef prices to the price index or to average hourly wage, beef is not priced out of line to the other goods and services they're buying or to their average hourly wage. So I think that what really has me optimistic this market is not so much of what we do on the divide up the supply side, but it's the fact that at this juncture, all the evidence is that consumers are not only continuing to buy, but they're continuing to buy beef even at the expense of the other protein sources. So the popularity of beef, the whole protein craze, an area that I think we've vastly under evaluated is the influence of the GLP-1 drugs and the influence that has not only on the 11 to 15% of the adult population that are on those drugs, but also for all the other eaters in that household. And that's driving the whole protein demand curve even further. So I would finish up that not only are we looking at incredibly tight supplies at the front end of the market, but we're still looking at a robust demand base on the backside of the market, and that's where all the money comes from.
Well, again, like you said there too, a lot of factors driving the prices and demand, because we need the demand factor there. If folks aren't eating beef, there's no demand. That's a pretty easy, clear as pie there on that one. But again, Don, I appreciate you sharing some insight and thoughts on these numbers and what could be in terms of what these bred cows and pairs could be. That's going to be interesting to watch over the next year for sure. But again, I want to thank you for joining us here today. And of course, if folks didn't have the opportunity to listen to Don and I's conversation, we were both in person a few weeks ago at the Cattle Industry Summer Meeting. We dive into a lot of those demand factors. I would encourage you to go back and listen to that as well if you have not done so. And again, Don Close at Terrain joining us. Don, any other projects you're working on right now with Terrain?
We're still continuing to develop work on the big shrink. That is a series of reports where we're looking at population levels by country and looking at the portions of the world where population numbers are actually starting to contract, and trying to pull not just conclusions out of that, but look at where we will likely be with import and export trade going forward. And I think there's some really good work in there for customers to think about how they want to position their business, regardless what sector of agriculture they're in, but how to structure their business for the 3 to 5 year run is some very interesting work.
Again, we look forward to learning more about that when it is fully available. And for more on not only what Don works on at Terrain, but all of his other colleagues and in the other livestock protein, and of course on the commodity end of things, just check out Terrain online. Some great insights on all aspects of agriculture and the impact it has globally as well. So Don, I always appreciate our conversations, and it's always great to talk about those higher prices, as our founder of Western Ag Network, Evan Slack, would always say when these prices would climb higher. So thanks for joining us.
Thank you. Thanks for having me on.
With that, friends, thank you for joining us. Make sure and click subscribe to wherever you listen to the LaneCast Ag Podcast, and we look forward to joining you next time here on the podcast. Have a great day, everybody. I'm going to go take a nap. It's been a long day. If you can't tell, I'm a little tired, but thanks for joining us. We'll catch you next time.
Thank you for tuning in to the LaneCast with Talkin' Ag, Lane Nordlund. Don't forget to subscribe to the LaneCast on your Apple or Android devices. We look forward to joining you next time on the LaneCast.